Good day, my name is Ed McFerran. You've probably seen me before in one of our videos associated with your ongoing tax-deferred exchange. Welcome back. This video is going to go over in somewhat detail the acquisition phase of your replacement property or properties. Now keep in mind, just to refresh memories, in a tax-deferred exchange you can relinquish one property or more than one property, and you can acquire what we call a replacement property or a number of replacement properties. There's no limit to the number of replacement properties that you can acquire. This particular video goes along with the phase that you're now encountering where your acquisition property is in escrow, or with a title company around the country, or with an attorney firm around the country who may be providing escrow services. You see, our services, as we said before, are throughout the United States, and of course real estate transactions close in a variety of fashions over various states around the country. In our practice, we deal primarily with your realtor, if there's a realtor involved, a real estate licensee depending upon the state, and also primarily with the title and escrow people who are closing your transaction, or the attorney that's closing your transaction in whatever state that replacement property is actually closing. By this time, we've had a chance to review the purchase and sale agreement for its compliance with tax-deferred exchange transactional regulations. Again, just to be clear, we are not providing services above and beyond those of your tax-deferred exchange qualified intermediary. Those other services can be provided, but we don't provide the specific services of full attorney review of the documentation for all purposes, only for purposes of your tax-deferred exchange. With that said, we have prepared a very detailed group of what we call escrow instructions. These are what are called qualified intermediary escrow instructions, and in fact our staff may have sent you electronically a courtesy copy of those instructions for your review. Keep in mind, there is nothing that you need to do if you receive a copy of those instructions. Every document that you see in those instructions will be signed by you in escrow, but need not be signed by you separate and apart. The copy that we're sending you is merely for your information and reference, and to help prepare you for the acquisition phase of your tax-deferred exchange. Here's what's going to happen now. You're entering into a purchase and sale agreement in whatever state that property is located. You are a purchaser, and in this particular transaction, we need to modify that purchase and sale agreement into an exchange agreement, and we're going to do that not within the confines of the purchase and sale agreement realtors. We're going to do that within the confines of the title and escrow folks. So part of our instructions to them is that we have prepared a legal document that is an assignment of the purchase and sale agreement. In this case, it's the assignment of the purchaser's rights under that purchase and sale agreement to our company, Tax-Deferred Exchange Services. That document is signed by you, also signed by the seller, where they agree and acknowledge that the transaction is going to be completed as a tax-deferred exchange. This changes the transaction from a purchase and sale to the acquisition of a replacement property in your tax-deferred exchange. It's a very important document. It's not all that long, but it's a very important document that is signed by the parties at escrow at closing in order to complete the transaction as a tax-deferred exchange. Financing-wise, you may have been dealing with a bank, a lending institution, a credit union, a mortgage lender, something of that sort for purposes of your acquisition. This doesn't change your acquisition of a loan. This merely changes the method of us acquiring the property. At the end of the day, you will receive a deed to that property. If it's in the state of Washington, it will be a statutory warranty deed. If it's in other states, it will have different names associated with it. But you will receive the deed to the property at the closing of this particular transaction. The transaction becomes one in which tax-deferred exchange services becomes the purchaser. As you take a look at the documents for the closing, which will be presented to you at the time of signing, you will see that the purchaser's name on all the escrow documents is not your name, but the name of our company, Tax-Deferred Exchange Services. This is the company name that we use to provide qualified intermediary services and to be in compliance with the Internal Revenue Service rules. As a result of these instructions, the escrow people will show our company as purchaser, and they will ask you to sign all the documents, merely approving the form and content of the documents. In many cases, you will find that they will have a stamp or some indication where you're not signing as the principal, you are signing merely approving the form and content of all the documents. As a result of that, we will be reviewing the documents for their compliance with tax-deferred exchange regulations, and we will be signing the documents, albeit electronically, albeit potentially in a different state, in order to approve the transaction. The thing that we need to focus on now is the matters of the settlement statement. I'm going to refresh memories a bit here, because in order to complete a tax-deferred exchange, we need to acquire a replacement property. Of course, if we don't acquire a replacement property, we don't have a tax-deferred exchange. So assuming that you are acquiring this replacement property, or potentially others, then at the end of the day, you will have been conveyed to you that property, and we will provide these qualified intermediary services as well as the money. Let's talk about the money part, because those funds, as you know, are being held in a bank account separately set up for your particular tax-deferred exchange, and those funds are earning interest, albeit not a great rate of interest, particularly today in our marketplace, but it's gaining interest for purposes of our use to acquire a suitable replacement property that either you have determined to purchase within the 45 days or declared in your declaration for a purchase after the end of the 45 days. And at the end of the day, we will be able to use those funds for purposes of the purchase of the real estate and attendant personal property associated with that purchase of the real estate. Now we're going to get a little bit complicated, because we need to talk about allowable uses of the money and non-allowable uses of the money. In many transactions, probably about 70% of the transactions for which we provide qualified intermediary services, our clients are obtaining a new mortgage loan for their replacement property. So in 70% of the cases, this video is applicable. If you're in one of the 30% of the cases, you don't have to listen to this portion of the video, because you are a cash purchaser, and all the issues associated with obtaining a mortgage loan and the application process, you need not pay any attention. You can merely fast forward to the next section. If, however, you are obtaining a mortgage loan, you will have by this time already received an approval from your mortgage lender, and you will have gone through a variety of tasks associated with obtaining the mortgage loan. Let's talk about allowable costs. During the course of the negotiations for your acquisition of a replacement property, in many states, there will be an earnest money deposit. An earnest money deposit, of course, goes along with the offer, and if the offer is accepted, typically that earnest money deposit goes in and is held in escrow by the title escrow or attorneys who are providing those services, and those funds are given to the seller upon the completion of the transaction. In this particular case, you may have very well advanced those funds from your own personal account. If you've done so, we will be tracking that, and we will make arrangements at the closing of your replacement property to refund that amount to which you advanced for an earnest money deposit. It's totally acceptable for you to advance an earnest money deposit if you so desire, and it's certainly acceptable for us, without causing any damage or harm to your exchange, for us to refund those amounts. Typically we do that through the escrow at the time of the closing. If, however, you have asked our company to apply earnest money deposits from your exchange account, that is acceptable as well. And we do provide that service as part of the overall services that we provide. We just need to have a purchase and sale agreement. We need to have it executed and signed and agreed, and be specific to a particular title or escrow company. And we can forward those funds, with your permission, of course, and that permission will be in writing, to the escrow officer to be held as an allowable closing cost for purposes of the acquisition of your replacement property. I think that gives you a pretty good idea of the earnest money deposit as certainly being a group of monies that we can use for purposes of the acquisition of the replacement property. A tax-deferred exchange is just this, a tax-deferred exchange of real estate for real estate. In the course of buying and acquiring a replacement property, we can use all the monies for the acquisition of the real estate, but we can't use the monies, and this is peculiar and it may sound strange to you, we can't use the monies to acquire a loan to purchase the real estate. We can only use the monies to acquire the real estate itself. This is where you may have read in some of our materials, this is where you may have had discussions with our staff. This is an area where you need to understand that loan costs, loan fees, appraisal charges, points, credit report fees, environmental studies, all those types of things, those costs that are attendant to obtaining the loan are not an allowable closing cost for us to use exchange dollars. To the degree that we use exchange dollars, those dollars could be deemed to be what we call boot. You'll recall from our literature and also listening to previous videos from me that the term boot applies to any funds that are used in the exchange that provide you a benefit that are not an allowable benefit of the exchange. In short, it doesn't cause your exchange to fail. That's the most important thing. However, at the end of the day, when your accountant is doing your tax return, your accountant will see that those dollars were given to you to benefit you, and it will result in having a less than 100% tax-deferred exchange if you don't use your own dollars for the acquisition of the replacement property. Think about it. To the degree that you are coming in at escrow and supplying your own funds for purposes of the purchase and the acquisition of the replacement property over and above the dollars that we're providing out of your exchange account, you probably are putting the dollars in that are utilized for purposes of obtaining the loan. Think about that for just a moment. Think about it one more time, because if you are putting, let's say, $20,000 of your own funds in addition to the funds that we are placing with the escrow closer, those $20,000 could be allocated to loan costs, and as a result, whether it's going to be loan costs or otherwise, it will allow those funds to flow through appropriately. To the degree that you don't, you may have a situation of boot. This is an area that I highly suggest that you talk with our staff. This is an area that hopefully you have discussed at the time that you're obtaining the mortgage loan. This is an important area that you understand of what are allowable closing costs and what are not. What are allowable closing costs? Well, our fee, of course, is an allowable closing cost. Title fees, escrow charges, recording fees, concessions, all of those types of transfer fees, costs, excise tax, any of those fees that are paid for by the exchange or paid for by you in essence, are allowable closing costs and go into the calculation of determining exchange value. So at the end of the day, you can feel comfortable at this stage that we have prepared exchange escrow instructions, that we're working closely with the escrow closers, that we're preparing and comparing the dollar amounts that we have available for purposes of your closing with the dollar amounts that we have in your account. Let's talk about security, one last point in this video. We do not transfer funds to any location for any transaction whatsoever without your specific authority. We do require that that specific authority be in writing. An email is an adequate writing for us in order to accomplish that. It's important that you understand that we will not be transferring any funds in your account unless we have specific written authority from you in order to do so. I tell you this now in case you're going to be on vacation or something like that and you anticipate that we will handle these matters automatically. They will not be handled automatically. These are your dollars. These are not our dollars. We're providing qualified intermediary services, but we don't have authority to act unless you specifically give us authority to act. It need not be hugely formal, but it needs to be confirmed that we have a specific authority to transfer specific amounts of money at a specific time. Without that authority, I can assure you right now, those funds do not leave your exchange account. This is an important consideration for us to be in compliance with the ethical considerations associated with being a qualified intermediary. I hope this video has given you a pretty good overview of what you can expect from the closing of your transaction. You will probably have signings at some office someplace. You can be assured that our office is already well aware of all the documents associated with the transaction. Again, feel free to call our staff and ask any questions that you have on the documents, and we're happy to help and assist you. Good day.